Hi, everyone. I wasn't aware that you already had quite some time on DAT, so we're definitely going to try to spice up the topic a little bit with the topic that we have now. Quick intros, maybe before we get started. My name is Shao. I'm operating partner at KKR. KKR is one of the leading private investment firms in the world with about 700 billion AUM, assets under management. A lot of what we do is actually to kind of own great private businesses and ultimately take them to the public markets, improve them and take them to the public markets. I've been leading the crypto strategy at KKR for the last couple of years, where we've backed a lot of the top crypto VCs in the space and done direct deals such as Anchorage Digital. And yeah, very excited for the discussion today. Dan?
Look at us.
We're going to be friends. There's no
Look
fighting on this stage.
My name is DK. I am the Chief Strategy Officer at DeFi DevCorp. We were the very first US-listed Solana treasury company, and actually the very first non-BTC DAT to launch back in early April. We're sitting on just shy of $500 million worth of Solana today, launched by a team of all former Kraken crypto exchange employees. And prior to DFDV, I was most recently the head of strategy at Kraken Crypto Exchange and spent about 8 years in long-short equity covering TMT stocks, and did 2 years right out of college at Morgan Stanley.
Hey everybody, I'm Joseph Shalom. I'm the CEO of Sharplink Gaming. We are listed on NASDAQ. We're the second largest ETH treasury in the world. We've accumulated in the last few months about $3.8 billion of Ether. I joined after 20 years at BlackRock, and in the last 5 years led Digital Assets, where we went from not managing any assets in crypto to managing over $100 billion, having launched the 2 largest crypto funds in history, IBIT and Ether, last year. So thanks for having us.
Yeah, before we get started on the ETH versus Sol, maybe just a macro view, right? If we look at the year-to-date fundraising numbers, what I'm seeing, because we've invested into quite a lot of crypto VCs, but the speed at which crypto VCs have been fundraising has slowed down a lot in the last 2-3 years. So year-to-date, we're actually seeing about 6 to 8 billion of AUM inflow into crypto VCs, and that includes 2 billion into Binance, right? So if you strip that out, it's actually a much smaller number. DATs are a new phenomenon this year, right? And DATs year-to-date have, by estimate, raised about 15, probably now closer to 20 billion total AUM across all assets. Obviously started with BTC, a lot more, I think in June, July on ETH, and then most recently sort of Solana. So the question is is there sort of a rotation going on, right, amongst institutional investors who previously had, only exposure maybe into institutional crypto VC, but now you basically have new instruments such as DAT. I think, Joe, you've built a lot of ETP products as well. How do you see that rotation thesis going on between VC, ETF maybe last year, and now this year DAT?
I just think of it as progress. And if you went back 2 to 3 years, I know we're sitting in Korea in one of the most active retail markets, but most investments at this point in crypto are coming from institutions. And if you look back 3 to 4 years ago, institutions did not trust custodians. They did not know how to own spot Bitcoin, ETH, or Solana. So they used venture as a proxy. They were familiar with venture capital. They put massive amounts, 2019, 2021, and it actually underperformed spot. And then the ETFs came out. BlackRock and 11 other issuers launched a Bitcoin ETF on January 11th last year, and it was a more accessible vehicle. You worked with Coinbase and Anchorage, and every institutional investor had another ETF. It was quite easy. I think the challenge with the ETFs, and I'll speak for Ethereum, is the ETFs are not allowed to stake. So imagine you own an asset, you expect it to be a capital appreciation asset, but you can't get the 3% yield. And I think the proof of stake DATs will allow investors, with a simple click, buy an equity, you get the capital exposure and appreciation, but you also get the ability to fully stake and get the yield. So I don't think this is good versus bad. It is just progress. And I think we're in the early stages of massive, massive institutional rotation, not just into crypto, but into digital securities.
Yeah, I'd agree with that characterization, and maybe just to put some figures behind it, because I was looking at this in prep for the panel, I think we peaked in terms of VC investment in deals around Q1 of 22. I think that quarter we had like $12 billion worth deployed. And then of course, in the aftermath of FTX, we never really recovered above a like $4 billion quarterly level. I think even this most recent quarter was somewhere around $2 billion. So we're talking 83% down from from the peak. And part of that is just a function of what was happening in the U.S. with Operation Choke Point 2.0, right? I think there have been others in the market who have very clearly made this point before. But imagine you are fresh out of college and you're debating doing a startup of some point, of some sort, and you have a choice between doing an AI startup or a crypto startup, and the year is 2023. And you have to take the risk of getting slapped with a Wells notice and dealing with just a really hostile kind of environment. And that, of course, stifled innovation in the industry, which, of course, has ripple effects to the amount of investable deals that there are in the market. So I'd agree with your characterization that I think this is just a natural evolution away from that to more accessible, liquid deals. And, of course, DATs represent a really easy way to not just get crypto exposure, but get enhanced crypto exposure.
Yeah. So maybe going from macro to a little bit more micro, right? So a lot of funding, a lot of institutional and equity market interest into these sort of DAT pipe raises. At the same time, there's just like a whole host of new DATs constantly being spun up. And now the question around competition and differentiation now matters more and more. So actually coming back to the topic of our panel, right? How do you see the competition now between these DATs, both within your respective assets, so ETH and SOL, and then across assets, right? Like, are there overlaps in investors? How do you see that? Is the competition within the asset bigger, or is it across the assets bigger? And what's the level of overlap? Maybe?
He's baiting the SOL versus ETH debate right now. He just wants it to happen.
We're going to have a great conversation.
So I think I'll take the first part of the question, which is on competition between different DATs that are doing different assets. And there's actually an argument to be made that they're not really competitive with one another, right? So if you just opened up someone's Kraken account, for example, they might hold a little bit of Bitcoin, they might hold a little bit of Ether, they might hold a little bit of SOL. So it doesn't surprise me that in a world where you wanted enhanced exposure to those assets, that you might hold a little bit of MicroStrategy, a little bit of Sharplink Gaming, a little bit of DFDV, right? And there doesn't really need to be a choose one versus the other. I think there's certainly a huge group of investors, both institutional and retail, who will want that kind of exposure spread across a number of digital asset treasury companies. On the other side of the coin is this idea that, well, DATs just compete for attention with each other more broadly, right? And one measure of that might be looking at a company's average daily volume relative to its market cap. And what's fascinating is if you look at, let's say, the S&P average ratio for ADV to market cap is somewhere around like 0.3 to 0.5% on any given day. And then if you look at MicroStrategy, their ADV to market cap is somewhere around 3 to 4% on any given day, right? Just by virtue of the volatility of Bitcoin being harnessed across its cap structure and all the attention that they are able to drive. And then if you look at the non-BTC DATs, the SBETs of the world, the DFDVs of the world, very frequently you're actually seeing ADV to market cap like well into the double digits. And that to me is just a phenomenal dynamic that is played out and tells me that there is obviously a lot of mind share going towards the non-BTC DATs, but I don't know if it's necessarily cannibalized MicroStrategy's volume or done anything detrimental in that regard. So that's one element of the competition picture. And then I would say between DATs that are pursuing the same asset, I have often compared digital asset treasury companies. I've used a metaphor to describe digital asset treasury companies versus ETFs with this river metaphor, which is to say if you buy spot or you buy an ETF, it's like sitting on a life raft on the river. And the river is the price action. Wherever the river takes you, if it goes up or down, you, the individual on the life raft, are going to go wherever the river takes you. Buying a DAT is like buying a speedboat on the river. It gets you to your destination much faster. You get the benefit of the price action of the current, but you can accelerate, you can steer, you can slow down if you need to. And your job, I think, as an investor is to try to determine not just the fastest boat, but also the safest boat, right? You want to pick a ship that is not going to sink, and you need to be able to bet on a team that has actually driven a speedboat before, especially with hundreds of these in market right now. So I think when you're looking at them specifically within a particular asset class, you have to really hone in on the team and whether they're a group of operators who have been in the space for quite some time. And I'm proud to say at DFDV that the aggregate crypto experience of the team spans multiple decades.
Yeah, I'll give a controversial answer. Hope everyone's waiting. Like, these DATs are going to be differentiated, but over time, they're all going to get to the 5% ownership of the protocol. It really doesn't matter if we get there first or we get there second. I think the competition is fundamentally different. These aren't trades. These are long-term opportunities. The competition is with traditional finance that likes things to settle in 1 or 2 days. They like friction. They like taking rents. They like intermediating trades. They like it when things are hard. I lived at the largest asset manager in the world. I understand the market structure. I think the competition is going to be, are we fighting over the $4 trillion of crypto market cap? Or is our target the $700 trillion of traditional finance market structure that we believe should be on a decentralized network that's trusted, that is programmable, that's digitally native, that is atomic and instant settlement? It is the greatest risk reduction in financial services history for trades not to settle in a day and not to have to buy insurance and not to have to worry about your counterparty. So I'm in this for a decade, and it's about fundamentally transforming financial markets for the better. And if you look at it that way, it doesn't matter who gets to 5% first. What matters is, are you promoting your protocol? Are you benevolent? Are you taking that token, in my case, ETH, in your case, Solana, and doing something positive to advance the tokenization, the stablecoin initiatives, institutional DeFi? That is the friction and competition, because otherwise we're looking at it too small. $4 trillion is nothing. It's the $700 trillion that is the target of innovation and transformation. And I'll be controversial, and I'll say that is what I'm more focused on than arguing about who's going to get to 5% first. That is what's going to transform our daily lives. Sorry, controversial.
Well, I think, look, I'll dig in a little bit more, right? Like, fully agree on the sort of big picture and sort of we have to go after the bigger market. But MNAVs, on average, are compressing very quickly, right? Yet more DATs are spawning. So many bankers, so many sponsors are working on new DATs. So what will ultimately be the success criteria, right? What are the differentiating factors? Maybe like one specific example. In your respective ecosystem, we all know ETH came up with essentially this whole proof of stake, concept, native yields, right, staking, etc. Yet on Solana, you have like native yield is maybe like 6-7% right now. Ethereum, it's a bit lower. Is that sort of one of the differentiating factors that really allows you to compound and generate sort of operating revenues as sort of a financial, fundraising, strategy? Or what else is there, right, to really successfully differentiate?
I agree with my colleague that the management team matters. I believe that the most liquid tokens are going to be the winners in the long run. But I think there's one metric that is critical for the survival and success of a DAT. It's a very simple measure. It's the daily average trading volume wherever you're listed. Like, we're listed on NASDAQ. There were weeks where we were a top 50 stock, $1 billion a day in trading volume. And why does that matter? Because most of the fundraising is coming through something called an at-the-market facility. And you do that by listing and issuing new securities every day. as a percentage of your daily volume. And if you look in the ETH space, Tom Lee runs Bitminer. I admire him. Between Bitminer and Sharplink, it's about 98% of the daily trading volume. And if you don't have daily trading volume, you're not going to be able to raise funds. So you have to have great management and you have to have a liquid stock. Otherwise, you're going to end up doing dilutive deals. That's my personal opinion. That is the currency of a DAT. It's a liquid stock.
Yeah, I would definitely agree with that assessment. I think the thing that I will add, because you were at it, you would ask specifically about some like success criteria and what's happening with MNAVs compressing, and I sort of view MNAVs as an output of whether or not you were, maybe successful or not, right? Not too dissimilar from the way, I don't think Mark Zuckerberg at Meta is going to go and say, hey, my PE ratio is at 26 or 27 times or something like that. My company is successful. He's going to go and say, I've acquired 5 additional points of market share this year in the digital ad space. Like, that to me is the input to my business that ultimately matters. And for us, yes, ADV is a huge indicator, for success and attention. But ultimately, at the end of the day, what matters for us is SOL per share growth. Because if we are talking about crypto treasury vehicles or DATs as permanent accumulation vehicles, as vehicles that give you compounding exposure over time, to go back to that speedboat analogy, you have to be able to give your shareholders more of the underlying asset over time. The only reason MicroStrategy has outperformed Bitcoin by 2.5x over the last few years has been, one, their ability to monetize volatility and attention via the ADV, but most importantly, that has driven Bitcoin per share, denominated in Bitcoin, by 5x over the last 5 years. Right, so you have to be able to grow the underlying crypto per share more quickly than individuals and investors could possibly do on their own. You certainly have to be able to generate yield in a differentiated way, and I would say in a probably risk-adjusted way as well. Right, you can't be taking on outsized risk in order to drive the underlying crypto per share. But at the end of the day, that's how I measure success, is were we actually able to drive SOL per share in a meaningful way.
So maybe coming a little bit about the future scenarios, right? We are seeing signs of some saturation maybe on the pipe front, on the ATM, maybe not yet, but how do you prepare for the inevitable sort of downturn scenario? Let's play sort of devil's advocate maybe next year. And how do you manage risk in that scenario, right? Let's imagine crypto bear market comes again, Bitcoin prices draw down 40-50%, sustained MNAV discounts, all of the metrics that you're tracking, right, going down, trading volumes, forced liquidations, some market consolidation already starting to happen. We see the news, maybe some activist actions, right, from hedge funds pushing for change. How do you, maybe just risk management in that scenario. How do you think about it?
I think the punchline is you have to be able to generate more of the underlying asset organically in some capacity. That, in my view, is probably the best bear market protection. So if you take a step back for a second and ask, where does MNAV even come from? And you peel back MicroStrategy for a moment. So say they're roughly 100 billion market cap. You back out the software business, which is a $0 billion business. You back out their Bitcoin NAV, which is let's call it roughly 60 billion. I know the actual Bitcoin's higher, but you've got to back out the debt and the preferred equity from that. You're left with 40 billion, which is this really weird mystery thing that nobody outside of the DAT space really knows how to attribute that value. And what I discovered early on when I was getting ramped up on the space is that is the value the market is assigning to future Bitcoin accumulation. But the problem with BTC DATs more broadly is that there's a circular reference that happens. The MNAV exists because the market wants you to buy more Bitcoin, but you can only buy more Bitcoin if you have an MNAV that exists, right? So there's this, you plug that into Excel, you get all the hashtag refs, all the errors. With a proof of stake treasury vehicle, you are freed from that recursivity. The bigger your treasury gets, the more of it you can stake, the more you can deploy on chain, the more of an organic source of yield that you have, and they're real revenue generating business and incredibly high incremental margins. So I think that's probably one of the best things you could have in place during a bear market to support NAV. And then, of course, there are certainly other elements at play as well. I think a share repurchase program makes a lot of sense, but only if you are not going to sell the underlying asset to repurchase your shares, right? You don't want to go into a death spiral of selling your ETH or your SOL to go and repurchase shares, right? If you have excess cash on hand, it's certainly one element to defend MNAV. And then specifically in our case, we thought about this very early on. We are not subject to activist risk because we control 80% of the vote. So even if we traded at a discount, we could just wait out a bear market and come out on the other end of it just fine.
Joe?
For me, it's very simple. Most businesses don't scale properly. If you run a DAT, you can run a DAT with 10 people, really, really qualified professionals. But let's just be clear, if your NAV doubles, if I go from 3.7 billion to 7 billion, I don't have additional costs. And if the price of ETH comes down, the stock's going to come down. This is clearly a directional bet on Ethereum. In our case, we have a strategic partnership with Consensus, the largest Ethereum company. Joe Lubin, the co-founder of Ethereum, is on our board. We're going to build operating companies. So a previous panelist was talking about DATs as a vehicle that ends, like you accumulate and you stop. If you own billions and billions of dollars of ETH, the things you can do to lend, borrow, run transactions, validate, secure transactions, you can actually build additional revenue businesses, which sometimes are correlated, but sometimes are not. And if you just think of the basic financial metrics, if you own billions of dollars of ETH and you can get as little as 3% yield, you're going to have $100 million of revenue. So like you can weather a downturn pretty well. Imagine then that you build operating businesses on top of it, because I'm not in this to create a 5% ownership in ETH and stop and do nothing and just become a giant dividend company. We're going to lift the community. We're going to seed and support protocols. And over time, we're going to help accelerate institutional adoption of digital assets. And it's going to transform the world. So if you're thinking about this as like measuring our MNAV at a certain date, or you're thinking about this just as a financial vehicle, that's not who we are. We're building an Ethereum operating company, and we're going to change the world. I know that sounds crazy, but there's $700 trillion of frictioned assets that need to exist in digital form. One last thing I'll say, I'm going to predict that if people have a moment, read ERC 8004. It's a proposed Ethereum protocol around trusted agents. I predict that most people in this room, if you have a crypto account or a brokerage account, you're going to have an AI agent that's going to understand your goals, your risk tolerance, your sentiment, where you think of the world from a prediction market, and it'll have registries, identities, and boundaries, and will be able to run your financial life as an extension of yourself. Earlier this year, I thought it would take years. I think that'll happen, if not this year, early next year. These technologies are going to fundamentally change how we live, and that's why I'm in it. I retired after 20 years at BlackRock. I could have stayed and managed $100 billion of ETFs. This is much more interesting. Sorry, I know I sound very controversial, but if you're just in it for a trade, I think you're in the wrong room. This is going to be a transformation of our fundamental economic framework, and it's going to be a paradigm shift.
All right, maybe closing statements. I think, Joe, you already started on sort of future outlook, but what's your maybe a little bit more specific to the DAT market? What's your prediction how the DAT landscape will look like in 3, not 5 years, let's say 3 years? Like, what role will it play, and what meaning will it have, right, for all of us?
I think in any token that's liquid with sufficient market cap, you'll have 2, 3, 4 winners who are scale operators who have daily volume in their stock. And depending on the pace of institutional investments, they may get to the terminal ownership value. And then what do you do? Do you stop, or do you do other things? I think there's too much focus on the moment. I personally predict if you're token number 188 and you're creating a DAT and you have no market cap, it's going to be very, very hard to survive. But I think the top tokens will do remarkably well. And then the question is, how successful will the protocols be? And I think if you look at Bitcoin, Ethereum, Solana, they're going to be here for the long run and they're going to change our lives. And I think you're early in that investment cycle. Don't think you've missed out on the price action. Now's a great time to accumulate.
Yeah, we've said for a while at DFDV now that like Solana is consumer grade crypto. It's like the iOS of blockchains. And to piggyback on Joe's point over here, that our goal is to obviously grow SOL per share as quickly as possible, but a natural second order effect of that is when the treasury gets to a big enough size, we can obviously meaningfully deploy assets on chain. And we've already done that today. We've got roughly 10% of our treasury on chain today. And my hope is a few years from now that can be a much greater amount. It makes strategic sense for us because, if we're bullish on the underlying asset that we're accumulating, of course we should be supporting the ecosystem more broadly. And, it gives us a way to really control our own destiny. So I think, supporting the ecosystem of the asset that you are accumulating is going to be an absolute necessity for DATs to really differentiate going forward. And, it sort of feels like a moral obligation for us as operators of these DATs to make sure that, the ecosystem is as successful as possible and that we are the best advocates possible for, in our case, Solana and in SBET's case, Ethereum. So there will obviously be fewer DATs in a few years than there are today, but I think the ones that will emerge will be the ones with the I'm going to say most disciplined operators who know crypto very well and are very clearly in it for, I'm going to say crypto ideology, because they just love what it represents.
All right. I think we're out of time. Thanks very much for the discussion.
Thank you, everyone.
Thank you.
All right. Well, thank you, our panelists, for that lively, informative, and thought-provoking discussions. A huge round of applause for our three gentlemen.